Hello and welcome to Weekend Investing Daily Bytes. Today is 20th of April and we're shooting episode 213. So after the huge volatility that we saw in the markets yesterday, today was a day of more stability. The market opened gap up and pretty much remained there for most part of the day. Bank Nifty, however, still remained weak and could not close above yesterday's close. In today's episode, we are also going to touch upon wholesale price index and consumer price index inflation rates. A lot of people are confused between the two, and we'll do a small primer on this to learn more about what these are. So within the different sectors, auto, which were weak since the last many days, took the lead at plus 2.2%. And IT was sort of in a correction to the downward move, still very weak overall. FMCG, pharma, energy, they were all reactively positive today, but the trend seems to be still very much down. Metals could not even trace back yesterday's fall. So did PSU banks, private banks could not really come out of the yesterday's weakness yet. So some sectors bounced, many sectors did not bounce. So larger trend sort of remains negative for now. This is despite overseas markets having bounced very hard last night, but also the fact that FIIs have been badgering the market with huge sales, more than 5,000 crores of sales yesterday, and today also it seems like some large number is expected. So Nifty, however, closed plus 1%. Most other indices between 0.5% and 1%. Small caps did not gain at all. They were flat at 0.02%. Within the weekend investing strategies, some strategies which did well yesterday, ATH2, ATH, were softer today, whereas MI30, all cap and small cap strategies recovered some ground. Overall, not a very decisive day either way, within 0.5% move on most of the strategies. In terms of big gainers in the market, MRPL up 18%, Responsive and Max Healthcare plus 10% each. COVID is back with a vengeance. Capri Global and Gujarat Alkali up about 8%. On the downside, Bharat Dynamics, which had been running up very hard last week, is down 6%. L&T Infotech post results 5.5% down. Neel Kamal, Persistent, Angel One all down between 4 and 5% for the day. So let's have a small primer on inflation. So what is inflation? Inflation is nothing but the annual rate of change in the price of any goods or services. In this case of an example, we are looking at potatoes. So 1 kg of potato going from 20 rupees last year to 30 rupees this year means the inflation is 50% on potatoes. So every month inflation rates are calculated both on a year-on-year basis, how prices change over the last 1 year, as well as on a month-on-month basis, how prices have changed from month to month. And these prices are then compared with different formats of the sale point. So there could be a wholesale market rate and there is a retail market rate, right? So we don't want to mix the two because these are two very different price points. So we are comparing wholesale price of onions this year with wholesale price of onions last year, and retail price of onions this year with the retail prices of onions last year. So wholesale versus, let's say, supermarket, retail, etc. So there are two indices, WPI and the CPI. So wholesale price index and the consumer price index, or you can call it retail inflation rate. So these are two different indices that are calculated. Now within the wholesale price index, what are the components it is made up of? So out of the weights that are there are primary articles, there is fuel and power, and there are manufactured goods in the ratio of 22%, 13% and 64%. So WPI is very heavily uh, skewed towards manufactured products, and you can see that in the current or in the last inflation figures of Feb 22, overall WPI was 13, which has now moved to about 14 plus. Primary articles at 13.3, fuel and power is 31.5% up, and manufactured products is 9.8. So primarily the gains in the WPI are being fueled by fuel and power here, whereas in a consumer price index, the articles that are made up of the weights are food and beverages at 46%. So largely more about half of consumer price inflation index is food articles. Tobacco, clothing and footwear is 6.5%, housing is 10%, fuel and light is 6.8%, miscellaneous including services is 28%. So this consumer price index also includes a services component, and within the last month, not this one but the previous one, we had a CPI of 6.07, which has now gone up a bit, and you can see here that food and beverages still remained reasonably benign. Tobacco is benign, housing is benign, fuel and light and clothing and footwear is somewhat which is moving upwards on that front. So short term trends, you can see that since last September 21 the CPI has been rising, and now from May onwards this larger base effect will kick in, and you will not see possibly a very high CPI from May onwards. But nevertheless, at current inflation levels, and let me also say that while we are calculating these two metrics, CPI and WPI, each individual has a very different inflation index of their own. So I as a person, may have my food and housing costs within my weight of expenses as maybe like 2% or 5%. Somebody else may have that as 60% of their expenditure. So it depends from person to person how that inflation is going to impact you, and what is your basket of goods or services that you are including in your inflation index. So it's very, very individual, sort of focused. You really can't say that 8% CPI, so I'm getting impacted as much as anybody else, because for each person the impact will be very different. For somebody who's maybe not so well off, then the basic amenities, the basic foods and vegetable may have a very large component in their expenditure, or somebody who is doing a lot of traveling may have a lot of impact of fuel in their expenditure, so on and so forth. So long term trends of the CPI have been somewhat in this range of I would say 4 to 7 over the last almost decade, but every time we've sort of gone up there, interest rates have had to rise to rein in the inflation, and that kind of kills the sort of hot economy, so as to say. But that's a very delicate balance that the RBI has to continue to maintain. So just to summarize, WPI is dominated by prices of manufactured goods, CPI is dominated by prices of food articles. If food prices go up sharply, it bumps up retail inflation more than wholesale inflation rate. The reverse happens when price of manufactured goods such as TVs, cars rise sharply. Key difference is that WPI does not take into account change in points of services, so a haircut or a banking transaction, but a CPI does. And services such as transport, education, recreation, amusement, personal care, etc. get significantly costlier, then retail inflation will rise, but there's not much impact on wholesale price inflation. But wholesale right now is at nearly 14%, and primarily due to fuel, and the consumer price index is near 7. We must always note that even though we may not be exactly impacted by this rate as one to one, we must know how much it is impacting us and how we are investing along with it. So if inflation is impacting me by 10% every year, and I've put my money in the bank at 4.5%, that too taxable, I am losing big ground on my net worth every year. So this, we need to realize that our money that is sitting in various instruments or in the bank need to beat the inflation that is affecting me, and that is the whole underlying reason why exposure to equity, whether it is low or high or balanced, needs to be there, and you need to be beating inflation on this entire portfolio that you have. So this is all I had for a small primer on inflation. Thank you so much for watching, and I'll see you in another video. Bye.